Wow! Today's homework has lots of calculations. It talks about single pricing method and dual pricing method, withdrawal benefits, death benefits, and benefits under regular premium policies. Whew, I'm glad it's over. Let's do something fun.
I know! Let's play benefits and risks of investing in investment-linked funds game.
Yahoo!
Before we start, Stephanie, do you still remember how to play the game?
I can't really remember. Can you tell me one more time?
Okay, before we begin, we will need to click on the Roll Me button on the corner of the game board to roll the dice. 2 dice each time. Add up the 2 dice. If the total number is even, then we need to draw a benefit card. If the total number is odd, then we need to draw a risk card.
Okay, now I remember how to play. We can start playing.
Let me start first. Yay! It's 2! Benefits! Let me draw a benefit card. Let me read out this benefit card. It says pooling or diversification. Investment-linked funds offer an access to pooled or diversified portfolios of investment. The funds normally consist of a wide range of equity stocks and fixed income securities.
Yahoo! It is for benefits again. Let me draw a benefit card. The card explains about flexibility. Investment-linked products have a simple product design with clear structure that caters separately for investment and insurance protection. Policy owners can easily change the level of premium payment, take premium holidays, add single premium top-ups, withdrawals, change the level of sum assured, and switch his investment between funds.
It's my turn now. Let me roll the dice and see what card I'll be getting. It's a 4! Benefits again! Let me draw a benefits card. The card talks about expertise. Investment-linked funds are managed by professional fund managers who have the investment expertise to invest the fund to achieve high return over the long term in accordance with the investment objectives.
My turn! Let me roll. It is 6. Benefits again. Let me draw a benefit card. The card mentions access. A policy owner can gain access to well-diversified investment-linked funds managed by professional investment managers with proven track records, simply by buying an investment-linked life insurance policy with an initial investment at as low as 4,000 ringgit.
It's my turn now. Let me roll what card I'll be getting. It's a 4! Benefits again! Let me draw a benefits card. The card talks about administration. The policy owner is relieved of the day-to-day administration of his investments, which can be a complicated affair. He only needs to keep track of his investments through the unit statements provided regularly by the insurance company and the unit price published in financial pages of major newspapers.
My turn! Let me roll! Finally, we have rolled an odd number. It's a 5. Let me draw a risk card. The card mentions investment risk. Death and disability benefits are based on sum assured and/or the value of units. Sum assured is always guaranteed, but value of units is not. Cash and maturity value will rise and fall drastically. Suitable for those who can tolerate the risk of short-term fluctuations in cash value.
It's my turn now. Let me roll the dice and see what card I will get. It's a 3! Another odd number. Let me draw a risk card. This card talks about charges. The administration fee, insurance charge, and the fund management fee of an investment-linked life insurance policy are usually not guaranteed. They are subject to regular review, and they can be changed by the insurance company after given a written notice over a specific period. For example, 3 months. Yay! I've reached the finish line! Let's see the cards we've collected in this game. We've collected 5 benefit cards and 2 risk cards. The benefits of investing in investment-linked funds are 1. pooling and diversification. 2. Flexibility. 3. Expertise. 4. Access. 5. Administration. The risks of investing in investment-linked funds are 1. Investment risks. 2. Investment charges.
Oh no, it's getting late. I'd better go home now.
Come, let me open the door for you. Boy, that was fun. We have got quite a lot of good cards today.
Yeah, we got 5 benefit cards, which are the 1. Pooling or diversification card, 2. Flexibility card, 3. Expertise card, 4. Access card, 5. Administration card, and 2 risk cards, 1. Investment risk card, and 2. Charges card.
Let's play again tomorrow.
Sure, see you tomorrow. Bye.
Tommy, can you be a dear and help me water the plants?
Sure, Mom. Mom, my investment flower is growing big.
Oh, really? How is it?
Let me check it out. Traditional without-profit life insurance products guarantees a fixed rate of return which includes term assurance and non-participating whole life and endowment. Traditional with-profit life insurance products are similar to the without-profit life insurance products, except that profits are added to the sum assured. Examples of with-profit products are with-profit whole life and with-profit endowment insurances. As for investment-linked life insurance products, the benefits are wholly or partly determined by underlying investments. With regards to term insurance, payment is made when the insured dies within the term of period assurance. For endowment insurance, payment is made when the policy matures or upon the insured's death within the term. Investment risk of traditional guaranteed without-profit life insurance refers to the insolvency of the life insurance company. There are 3 types of bonuses with regards to investment return of the traditional with-profit life insurance, namely 1. Cash bonus, 2. Reversionary bonus, 3. Terminal bonus. The investment risk of traditional with-profit life insurance is that future bonuses are never guaranteed. Returns and risks of investment-linked life insurance products are directly transferred to the policy owners. The premium computation of the traditional guaranteed without-profit life insurance is determined and fixed at the inception, stated in the policy. The premium computation of the traditional guaranteed with-profit life insurance is similar to the without-profit policies. Determined and fixed at the inception, stated in the policy. The premium computation of the investment-linked life insurance products is account-driven, has flexibility in changing the premium payments, taking premium holidays, and adding single premium top-ups. The death benefit of the traditional guaranteed without-profit life insurance is determined and fixed at inception, stated in the policy. The life company may not alter the terms and conditions without the agreement of the policy owner. The death benefit of the traditional guaranteed with-profit life insurance has fixed SA plus whatever bonuses that have accumulated up to the date of death. Only the SA is guaranteed at the outset. The death benefit of a single premium investment-linked life insurance product is calculated as either minimum SA plus the value of units in the fund, minimum SA or the value of the units in the fund, whichever is higher. The death benefit of a regular premium investment-linked life insurance product is calculated as either SA chosen by the insured or the value of the units in the fund as the bid price, whichever is higher, or SA chosen by the insured plus the value of the units in the fund at the bid price. The surrender value of the traditional guaranteed without profit life insurance has the following conditions. Other than term insurance of more than 20 years, no payment is made. Endowment and whole life policies surrender value payable upon surrender. The surrender value of the traditional guaranteed with profit life insurance includes the surrender value of reversionary bonus up to the date of surrender. Varies with age of life insured. The surrender value of the investment-linked life insurance product is calculated as single pricing policy, which is market price multiplied by the number of units. Dual pricing policy, which is bid price multiplied by the number of units. The option to top up of the traditional guaranteed without profit life insurance has the following conditions. SA may be increased each year by a set percentage of the original SA. Short-term policies may be renewed at the end of the term for a higher amount. The options to top up the traditional guaranteed with profit life insurance has the following conditions. Very few allow the option to top up. If allowed, it is similar to without profit policies. The options to top up of investment-linked life insurance products is that it allows policy owners to buy additional numbers of units without taking out a new policy.
How's your favorite flower?
I found out from my investment flower that investment-linked life insurance and traditional with and without profit life insurance products use 5 criteria to compare. 1. Investment returns and risks. 2. Premium computation. 3. Death benefit. 4. Surrender value. 5. Option to top up.
Oh, that's very good. Come, let's go in and get ready for dinner.
As a whole, when comparing investment-linked life insurance product with traditional life insurance products such as term, whole life, and endowment, 5 criteria are used. 1. Investment returns and risks. 2. Premium computation. 3. Death benefit. 4. Surrender value. And 5. Option to top up. Do you have any questions, Mr. Tan?
I understand this part, but what about taxation and laws covering investment-linked life insurance products?
Oh, there's a very simple matter. Let me show you from my iPad. Actually, the taxation of investment-linked insurance is treated the same manner as other forms of insurance policies. The business of investment-linked life insurance is regulated by the law that govern the other forms of life insurance business, such as the Insurance Act, 1996, and its regulations, the Company Act, 1965, the Contracts Act, 1950, and legal provisions governing the common law of agency. The tax laws currently governing other forms of life insurance apply to investment-linked life insurance. The principal legal document regulating income tax in Malaysia is the Income Tax Act, 1967. The tax rate and relief are usually reviewed annually when the finance minister proposes the budget for the year. These rates are then incorporated into the Finance Act for that year. The premium relief is allowable when the life insurance or deferred annuity is 1. On the individual's life. 2. On the life of the spouse of the individual. 3. On the joint lives of the individual and his or her spouse. The total relief allowable for all insurance premiums on the life of an individual or his or her spouse and on contribution to approved provident funds, such as to the EPF in a year, is 6,000 ringgit. Effective from the year 1997, the relief allowable for payment of life insurance premiums for a life insurance policy is no longer subjected to the limit of 7% of the capital sum insured of the respective policy. Under the 1996 budget, an extra tax deduction of 3,000 ringgit under Section 49 subsection 1b of the Income Tax Act 1967 was announced, which can be used for education and medical insurance premiums. This is an addition to the normal tax deduction of 6,000 ringgit. In Malaysia, the regulation of insurance business is achieved through the administration and enforcement of the Insurance Act 1996 and regulations. The main purposes of the regulations include 1. The protection of public interest. 2. The promotion of fairness and equity. 3. The fostering of competence. 4. Playing a developmental role. Law covering investment-linked life insurance. Definition of investment-linked life insurance. Section 7, subsection 2, subsection B defines investment-linked business as affecting and carrying out of a contract of insurance on human life or annuity where the benefits are, wholly or partly, to be determined by reference to the value of, or the income from, property of any description, or by reference to fluctuations in, or in an index of, the value of property of any description. Law covering investment-linked life insurance. Requirement for approval. Section 7, subsection 1, subsection B of the Act. Insurance Act 1996, Section 7, subsection 1, subsection B requires 1. The licensed insurer to carry on investment-linked life insurance business with prior written approval by Bank Negara Malaysia and subject to the authority's conditions. 2. The licensed insurer to submit a detailed business plan to enable Bank Negara Malaysia to access the expertise and technical capability of the insurer to market and manage its business in an efficient and sound manner. Law covering investment-linked life insurance. Investment limits. Bank Negara Malaysia's circular JPI January 1997 on specification of assets for the purpose of a licensed insurer's margin of solvency is not applicable to investment-linked funds because the investment-linked fund could be invested 100% in equities. Law covering investment-linked life insurance. Investment limits. The investment-linked funds are subject to the following general restrictions to reduce the risk exposure to any one company. 1. Investments in the security in any one investee should not exceed 5% of the paid-up capital of the investee company or not more than 5% of the total value of the assets of the fund, whichever is lower. 2. And investments in loans or debentures to any one borrower or group of borrowers should not exceed 5% of the total value of the assets of the fund. Law covering investment-linked fund insurance. Valuation of assets. As the amount of cash value and death benefits for investment-linked life insurance policies are based on the value of the underlying assets of the investment-linked fund, the assets of an investment-linked fund must be valued frequently to provide policy owners with more accurate unit prices and benefits. Law covering investment-linked life insurance. Valuation of liabilities. In accordance with the requirements of the Insurance Act 1996, an annual actuarial valuation certifying the level of reserves for cash values, death claims, administrative expenses, and other benefit payments of the investment-linked fund must be done by the insurer's appointed actuary and submitted to Bank Negara Malaysia within 3 months of the end of the financial year. Law covering investment-linked life insurance. Age limit of policy owner. The policy owner of an investment-linked life insurance policy must be at least 18 years old. There is no restriction on the age of the life assured. Law covering investment-linked life insurance. Free look provision. A policy owner within 15 days after delivery of the investment-linked life insurance policy may return the policy to the insurer and shall be immediately refunded by premiums paid in respect of the policy. Law covering investment-linked life insurance. Minimum death benefits. Investment-linked life insurance policies must have a minimum death benefit of 5,000 ringgit or 125% of the single premium, whichever is higher. Law covering investment-linked life insurance. Premium payment for single premium. Single premium policies must at least have a minimum premium of 3,000 ringgit. This is to ensure a meaningful level of investment outlay for the benefit of the policy owners. Law covering investment-linked life insurance. Intermediation. The investment-linked life insurance products should only be marketed by agents specifically trained and equipped with the product knowledge. The basic qualification would be the MII certificate examination in investment-linked life insurance. Law covering investment-linked life insurance. Disclosure of information. Sales materials or illustrations must contain statement to policy owners, fund performance report to policy owners. So that's everything about taxation and law covering ILIP. Do you have any questions?
I think I understand better now. You mentioned that premium relief is allowable when the life insurance or deferred annuity is 1. On the individual's life. 2. On the life of the spouse of the individual. 3. On the joint lives of the individual and his or her spouse. The main purposes of the Insurance Act 1996 include 1. The protection of public interest. 2. The promotion of fairness and equity. 3. The fostering of competence. 4. The playing of a developmental role. The laws covering investment-linked life insurance. Did I understand you correctly?
Yes, absolutely. I would like to congratulate you once again. You now have a better understanding of insurance and are now protected by Prudential. Let us meet up next week for me to pass you your policy contract.
Sure. Thank you so much and see you next week.
Who was that?
That's Uncle Samuel. He was telling me about the allowable premium relief on life insurance and deferred annuity. The main purpose of the Insurance Act 1996. The laws covering investment-linked life insurance.
Have I seen him before? He looks familiar.
Yes. Remember last weekend, we went to the shopping mall where we met Uncle Samuel at a huge red-colored booth? We met Uncle Samuel there. He came and approached us with a survey form while we were walking in the shopping mall. He told us that he is from Prudential Assurance and that he was there to help clients fulfill their financial goals. He then asked me some questions in the survey form to gather relevant data that would assist him to analyze our planning needs. He explained that this allowed him to have a clear understanding of our present situation, which would help him formulate recommendations to achieve our financial goals and objectives. After he had gathered our data, he analyzed the data and came up with an analysis that helped us to establish our current financial position and future goals. After that, he developed a plan to help us realize our goals. The recommendations that he made were also based on the plan that satisfies our needs. After he came out with the plan and recommendations, he discussed the plan with me more thoroughly to see if I needed to do any more changes to the recommendations. Uncle Samuel's data was accurate, and even the recommendations he made were precise. I agreed with Uncle Samuel's recommendations. Uncle Samuel then helped me to fill up the application form and submitted it to his company for approval. Uncle Samuel assured me that he will review our plan every year in order to ensure that the plan meets our needs.
Oh, now I remember. I see Uncle Samuel is very professional in 1. Establishing a relationship with the client. 2. Gathering all relevant financial data. 3. Establishing current financial position and goals. 4. Developing plans and strategies to meet the goals. 5. Discuss possible recommendations. 6. Implementation of the agreed recommendations. And 7. Monitoring the portfolio.
All right, boys, it's time for dinner.
Okay.
What were you boys discussing just now?
Wow, we were talking about Uncle Samuel. He's a really professional agent. He identifies and establishes our needs through the following steps. 1. Establishing a relationship with the client. 2. Gathering all relevant financial data. 3. Establishing current financial position and goals. 4. Developing plans and strategies to meet the goals. 5. Discuss possible recommendations. 6. Implementation of the agreed recommendations. 7. Monitoring the portfolio.
Yes, I agree. He does his job very well. He didn't hard sell his products or services. Instead, he diagnosed our requirements and needs before he proposed any plan to us. This is what we call market-oriented agent and not sales-oriented agent.
Mom, I'm still not very clear. What exactly are the differences between a market-oriented agent and a sales-oriented agent?
Son, actually, a market-oriented agent is someone who distributes policies with the objective of satisfying the customer's requirements and needs and at the same time earn an income for himself. This can be achieved through the use of sales plans, where sales goals, strategies, and objectives are coordinated with market analysis, segmentation, and targeting. Whereas for a sales-oriented agent, hard sales techniques are frequently used to stimulate a customer's interest in the company's products. Customers who purchase policies from such an agent have usually ended up buying policies which they do not understand, meet their needs, or they could afford.
Oh, now I know the difference between a market and sales-oriented agent. How does this actually help him in his job?
This is because, as a market-oriented agent, he will need to have the knowledge of the product, the market, selling techniques, buying process, and selling process.
Wow, those are a lot of things which a market-oriented agent needs to know. But Mom, why do they need to have knowledge of the buying and selling process?
This is because knowledge of the consumer buying decision process helps the agent to adjust to buyers, and consequently the sales part will be more pleasant. There are 5 stages in the consumer buying decision process. 1. Problem recognition. 2. Information search. 3. Evaluation of alternative policies. 4. Purchase. 5. Post-purchase evaluation. As for the selling process, basically it involves 5 steps as well. 1. Locating the prospective customer. 2. Creating a sales presentation. 3. Conducting the sales interview. 4. Handling objections. 5. Closing the sales.
Not only that, someone like Uncle Samuel, who is a market-oriented agent, also focuses on after-sales service. In fact, he will be meeting us next week to deliver us our policy.
Wow! Looks like Uncle Samuel carries out his business in a very professional and ethical way.
You are right, son. Uncle Samuel actually demonstrated his ethics in 1. Behaving with complete integrity in an insurance agent's professional life. 2. Complying with the law and with the best principles and practice relating to financial advice. 3. Behaving in a professional and honorable manner towards those with whom the insurance agent is in contact in business. 4. observing and applying the relevant codes of good practices. That's why we chose him to be our agent, because he really focuses on our needs rather than pushing his products. He understands the consumer buying decision process and selling process. He performed after-sales services, and most importantly, he is committed to maintaining an absolutely ethical standard in carrying out his business.
Mom, Dad, my ambition is not to become a prime minister anymore. I would like to become an insurance agent, just like Uncle Samuel.